Dave Knudsen, Gravity Capital. Most of our videos have been geared towards brokers, but this module, actually, all these manuals, also include investors. Today, as investors, I want you to be thinking about this. Where can you get a secured 42% return in 1 year? It's actually pretty phenomenal. I'm surprised more people haven't caught on to this. So we at Gravity lend money. We lend money secured by real estate. And the real estate we secured, as you would imagine, has a value. We lend money against that collateral or against that value. The golden rule, as I've said many a times, is that we'll lend money at about 50% or less of what the value is worth. And here's one of the examples. By the way, this is a real small loan, but I want you to let you know that as investors, you can invest in smaller or bigger loans. Our average loan is somewhere between $500,000 and $750,000. This one happens to be a small one. A guy named Vito came to us and requested a loan. He's in Arizona, and he had this as collateral. He had a commercial piece of property valued at $150,000. Now, when we value these properties, we like to stay as low, conservative as possible. So when we put a value of 150, our analysis predicts that we could sell that very quickly. We got a commercial value of 150,000. We had a residential land and a house. We valued it $110,000, and then he just threw in an extra piece of land that he had nearby this area for $20,000. So in this instance, we had $280,000 of collateral that also included these three pieces of land. When we lent the money, this is the terms of the loan. We originally lent him $150,000, but of the $150,000, we only put out $135,000. That's because we charged 10% of this amount when we lent the money. So we charged Vito $15,000 of the $150,000, so we ended up giving him $135,000. This is what I would call the origination points. This is what we made just for doing the loan, $15,000. There's a 10% return right there. This was a 1-year term, and at the end of the year, if he didn't pay it back on time, there was another fee added on, which was another 10 points of the loan amount. So we had 12 months, and also for you brokers, keep this in mind, the brokers on this transaction, very small loan amount, made 3% of the loan amount, of this amount, so they made $450,000. We charged 18% for this loan amount. Brokers, so this is a very easy way to make $4,500. If you just keep in mind, that's what you're trying to find, is a person that needs money secured by real estate and they're non-bankable. Vito was not bankable. Now you would say to me, why would I lend money to a guy that's unbankable? One is because he had collateral. Number two, we met with Vito. He was a good guy. He had a job. He had some income. And he was pretty, to me, he was a pretty solid guy. And he just had some income issues with the bank. So this loan amount, this was our collateral. Now we collateralized this with a document called a trust deed. A trust deed secures your loan. So when I record a trust deed against a piece of property, I always get a title company to ensure that I'm in first position. I get an attorney to draft the loan documents. And then when the title company, when my attorney gets the loan documents drafted, they give them to the title company. Vito goes into the title company. He signs the loan documents. As soon as my attorney says, yes, we're in first position. Yes, we have good title on the property. And all the documents are signed by Vito in a correct way, then I wire money to the title company. The title company holds the money. After they hold the money, they record the trust deed. It's in first position, and after my attorney says everything's good to go, then the title company will actually wire the money to Vito, which they did in this case. Now, Vito was a very good payer, which most of, I wouldn't say probably half of our borrowers struggle a little bit to make payments on time. But we've geared our scenario to people who don't make their payments on time. And if they don't, there's late fees. And so we Actually, our returns bumped up a little bit. In this case, Vito made his payments on time every month. He ended up just over the year amount. He paid us $28,000 in payments. Now, at the end of the year, Vito wasn't actually able to pay it off on time, so there was actually a rollover fee that we added onto his loan that was built into the documents that basically said he had to pay an extra $15,000. Vito ended up paying this amount off to us, plus the payments, right? So if you add these two numbers up, that's how much our payoff was, $168,000 plus $28,000. And if you take the final date of 10/8 of 2019, it gave us a total return, annualized return of 42%. Again, I'm trying to get or let you know as investors, this is very plausible. We've done hundreds and hundreds of these loans transactions and have had great success with them. The secret is making sure you have the right collateral, making sure you have an attorney to draft documents, making sure you have a title insurance company that will insure it, making sure you have a borrower that seems like a pretty good guy. So that is how you can get a 42% return annually. Keep that in mind as you want to make your investments in the future. Again, you can get some of those investments maybe long-term over more than 1 year. This was just a little over 1 year. It worked out spectacularly well. Dave Knudsen, Gravity Capital. Feel free to call, talk to us about it. You as new brokers, you know, this will be good for you to keep this in mind as well. And this is totally possible and it's safe and secure. Dave Knudsen, Gravity Capital.